Okay, here we go again. Another week, another update. So we had a hiccup in the market this week. Every time they talk about tariffs, everything goes belly up. So anyhow, this is an episode of rental house versus high income ETFs. This is an experiment I'm doing. We sold most of our rental properties. One of the last houses we sold, the one in the picture there, we took most of the proceeds and put it into some covered call ETFs. And my theory is that the returns on the ETFs will blow the rental income out of the water. Plus, I won't have all the headaches of the rental houses that I used to have. And we travel more now that we're retired. I got some hobbies and all kinds of good stuff. I don't want to be stuck with rental properties at this point. However, we are looking at some rental properties currently. So they're in the neighborhood. So yeah, just when I think I'm done with rentals, one pops up that has kind of caught my eye. So maybe I'll make some videos on it if we decide to buy it and see the transformation from it'd be like a fixer upper and then a rental to perhaps travel nurses. So more about that maybe in the future to come. So this is episode 10. We have been at this for 9 complete months now. So if you would be so kind to subscribe, it only takes a second to click the subscribe button and it helps my channel out. And someday I'd like to get this monetized and hope to make a few dollars. And so the money I make from this, I use it to refurbish tombstones in cemeteries that I do as a hobby. So right now I pay for all that stuff out of my pocket, which isn't a lot of money. However, it's very labor intensive, but there's cleaning supplies and some different things. You're not going to help me get rich, but you might help me support my community service project I got going on. So I'm doing community service not because I got court ordered to, but I'm doing community service because I like to do it and nobody else will. So let's see what we got going on here. We were up well over 80,000 last week. We are back down to 78,492. Our margin is sitting at 71,074. So I get questions about margin. Am I getting close to margin calls and all kinds of other things? So I still have $40,000 in buying power on my margin account. These different funds have different margin maintenance requirements, like 50% or 30%. And I can't keep track of it. So I can look and keep track of it by looking at it, but I don't know what the formula is for sure. I thought I had it figured out, but apparently I don't. And if you want to see what I've been buying, I got QDTE, AIPI, QQQI, SPY-I, GIAX, and these are the amounts, average cost, the current price, total return, equity, all that good stuff. So these totals are the equity plus the margin. I like looking at this chart every week. This is the S&P 500 or the SPY. And I like to see what the Bollinger Band doing is in the 20-day moving average. You can see the 20-day moving averages here. Last week, I was commenting on this. The Bollinger Band, the price was like kept poking at the top. And then also the RSI, the relative strength index, was like 76, I think it was, which indicates an overbought type of scenario. So I made a comment that this was overbought and we might look at a pullback a little bit possibility, but also probably said in the same breath, it could break out and go higher. But I was expecting a pullback based on just these indicators, not because of more tariff talk. So I was right, but not for the reasons why I thought I was right. So either way, it did a pullback. And so it fell down below the 20-day moving average. Does that mean anything horrible is going to happen? I don't know. Is that moving average going to start actually going down like it did that go over here, head down, then it goes down for a long time, and then it bottoms out and it starts going back up? Is this the beginning of a long downturn? I don't know. Could be, maybe not. I hope not, but it doesn't really matter because as long as the price of stocks don't go down too fast, and if they don't go up too fast, they go sideways and slowly up, that would be perfect for me and for anybody who's in covered calls. And I won't go into the details about that, but that would be the best scenario. Let's keep going here. What have I purchased recently? Last week, this is the same. I bought about a week or two ago, I bought 50 shares of AIPI, 50 shares of QQQI. So a total of about $4,700, almost $5,000. I couldn't decide what I want to buy, so I bought 50 of each. I actually popped back here. I'm at 700 of AIPI. I thought I'd get that to 750, kind of an even number, and then just start building up QQQI, and then maybe alternate between SPY-I, QQQI, keep building these two positions up, and then eventually make these just my anchor ETFs, you might call it, the main ones for this account, and let these build up. If the NAV erodes from these two, so be it. But as these pay distributions, I'll roll that money into these two over here. And what has happened recently, at the end of last month, this wasn't quite updated yet. I got $180 from GIAX. That's a monthly payer. And then I got $642 today distribution from QDTE. So even though QDTE is down in price, it still pays a pretty good weekly distribution. And if you're new to this stuff, QDTE pays weekly, and then the rest of them pay monthly. So we just got done at the end of July here, all these distributions. I was missing one from last week, GIAX. So combined, I ended up with $3,400 for the month. At some point, I could probably just quit messing with this, let the distributions just go toward the margin and pay the margin off. Let's say $3,300 a month. So my margin is 70,000. So approximately in 2 years, or a little bit more than 2 years, that margin would be paid off. And then that point, I could just start pulling out, let's say, $3,000 a month for travel or whatever I want to do. It's not money that we need for anything. So we're just like my Las Vegas gambling account, you might say. This is what I projected at the very beginning of this project back in November 2024. I came up with this here spreadsheet, and I projected that I'd be sitting at 94,000 right about now, and I'd be up almost 35% since the beginning of the project. And the reality is I'm up to 78,000, starting at 70,000, and I'm up 12% instead of 34%. Last week I was all excited, thinking like, hey, this is my dividend snowball I've been talking about this whole time. A little bit of a drop. We lost the last 2 weeks of gains, but previously we had a pretty good run here for a long time. So we were due for a pullback, but I hope it doesn't extend out too long. If I hadn't just bought more shares a week ago, I would probably go buy some more. This margin here is what I expected my margin to be when I projected all this. I projected my margin to be about 75% of what the equity is. So that's what I want to keep the margin at, 75%. I'm actually at 91% here. I only stayed within my self-imposed limit the first week here. And then I've been over ever since, as high as 129%. The last couple of weeks, I was down to 86% margin, and that's when I bought the AIPI and QQQI. So I'm at 91%. If I didn't already just buy some shares a week and a half ago, I'd be buying more right now with this dip. This is all about comparing how the house would be doing compared to the ETFs. So if we would have kept the house, we'd be collecting the $700 a month in rent here, paying $80 for insurance, $200 for taxes. I'm not taking into consideration any other costs at this point. At the end of the year, I'll do a video and include the average expenses for the past 3 years for this house and toss those in there. But this is just including the taxes and insurance, the fixed expenses. I would have about $4,200 in positive cash flow for the year. assuming I don't have any debt on this property, which we didn't have any debt on it when we sold it. And we would be sitting at $72,000 in equity. I calculated that this would grow at 4% per year, which is $233 per month. So that's added in here. So when you add the checking account with the equity, the rental house would be sitting at about 76,500. And to compare the two, the ETFs at 78,493. Here's the house. So the ETFs, even though we had a bad week, we're still up a couple $1,000s with ETFs. And on top of that, we've had no calls about plugged up sewer lines, which is always nice. It seemed like this particular house, there was always calls about sewer lines being plugged up. And the thing is, I had a camera. The sewer guy came out and ran the camera. They're perfectly fine lines. Anyhow, you didn't have to hear about all that. But what I would like you to do is subscribe, and then I will see you again next week.